Hey everybody, what's up? We are back for another stock analysis. Today we'll be looking at Axcelis Technologies. So they are a fairly small company at about a 2 billion market cap. They basically make equipment for the semiconductor industry. So they are related to the semiconductor industry. However, they're mostly in the manufacturing area of equipment for companies that make semiconductor chips, as far as I know. That's all I know so far. So we're going to get a first look at this company, go through their financials, do a little bit of a look into their earnings reports, and then go over their chart. So if you're interested, make sure to subscribe. If you haven't, I make these videos every single day of the week. And let's get into Axcelis Technologies. So getting into Axcelis Technologies, we could see manufacturer of capital equipment for the semiconductor chip manufacturing industry. They also do services related to that, such as support, upgrades, maintenance, things like that. So $2.2 billion market cap, which makes it a fairly small company. Target price at 104, a little bit of a negative long-term growth rate. Right now, the price is sitting at 68, so there is a lot of expected upside there. You could see a little bit of their chart here. They were outperforming for many years and hit a peak right around the second half of 2023, and since then have been in a pretty significant downtrend. Now, one thing that I'm going to be looking out for is during this period of time, have their financials and sales been increasing and improving? If that is the case, I think we could be looking at a very significant undervaluation situation here. And in that case, it could be a fairly strong buy, at least for the near future. So getting into a growth summary here, we could see their projected growth over the next half decade is incredibly positive. Sales growth has a 19% CAGR over the next 10 years, which is huge for any company. But especially a company like this that's, from what I understand, more manufacturing focused, that these numbers look fantastic. So very positive things here, especially that free cash flow growth. We are expecting a little bit of a decrease in 1 year or with the 1 year estimates, but overall long-term free cash flow increasing this consistently will be amazing for the company. So anyway, let's now get into their financials, starting out with their income statement. And looking into it here, this is over the past couple of years. One thing to note is the 2024 year is not finalized yet for them, so we don't have all of the data, so this will most likely be higher than 2023. But overall, with incomplete data, their numbers are looking very solid. You could see operating income is just below 2023. Net income is very, very slightly below. And even their sales are almost the exact same with incomplete data. They still have an entire quarter to add to this, from what I understand. So this looks fantastic so far. You can see their sales growth over the past few years has been very, very strong. Basically nearly tripling in about 5 years, which is fantastic. Other than that, their total shares are actually declining, which is not something you see very often. They have gone down for 3 years straight now, almost 4 years straight now. So that is fantastic, especially for a small company like this. You usually don't see that. And also, I don't know if this is in. So they have over $1 billion in revenue, and the company is currently valued at $2 billion. I think there's a lot that can be sent towards the upside here, just based on these revenue multiples. Even like their net income being 10% of their market cap, that's pretty crazy. Usually the valuations don't end up like that. So in my opinion, I do think there is a lot of upside here. Moving into their assets, total assets are at 1.2 billion. We can see there has been a ton of growth over the past few years, which is great. Very little debt, which is another super positive thing that we love seeing here. And a ton of cash to go with that. So overall, their financial situation at the moment is fantastic. Nothing else to even go through on the balance sheet there. They look like they're in a phenomenal position. Going into cash flows, we could see they have been growing their cash flows fairly significantly. Again, this 2024 data only has 3 quarters so far, so they don't even have complete fiscal year data. They're most likely going to have an all-time high in their operating cash flow. Other than that, their other cash flows look perfectly fine. Their free cash flow is very, very positive and increasingly positive. It will most likely also be at an all-time high once their final fourth quarter data is put in here. So overall, I'm seeing a ton of improvement here. Just over the past few years. And actually, what we can do, because if we look, this is the last year for the company. So what I'm going to do is look over the quarters of everything as well here, because I was only focusing on the fiscal year. So let's look over the quarters as well really quick. And if we see here, 2024, their revenue was incredibly consistent, staying just about the same each quarter. Net income fell slightly throughout the year, which mostly is completely fine. SG&A expense did increase. Operating income also decreased slightly throughout the year. So what could be happening is their sales are mostly staying the same, actually seeing slight increases each quarter, which is good. But their sales are staying mostly the same, but their profitability is very slightly decreasing alongside that. So that could be part of the issue here with the stock price declining throughout the year is people saw less profitability. That is what I'm going to assume, but we can't really be sure for certain until we get a little bit farther into the company. But overall, just from a financial standpoint, that's what I'm going to base this on. And just seeing 2024 being so strong for them overall, I think there is a lot of upside here. But let's also look at their balance sheet. I can't imagine there's going to be much difference here. So all-time high right now in cash, which is fantastic. Total assets are also at an all-time high, which again, very good. Debt did increase slightly, but honestly, really nothing to be in any concern over at all. They have a ton of cash. And also, let's go into their cash flows as well. Maybe we can see a little bit. So cash flows for 2024 were, again, very consistent. You could see they're purchasing a ton of investments, which is really never a bad thing. And other than that, they have been repurchasing stock just about every quarter, which again, we saw earlier on their income statement. And other than that, I'm really not seeing anything negative here at all. Free cash flow is very positive, much more consistent than 2023, and consistently higher now as well, which is phenomenal. So now moving on to the ratio analysis, I kind of know what to expect here, at least for the quarters, which is what we're going to look at. So there will be a little bit of a decrease in profitability over the year, which we could see here. Gross margin dropping slightly, net margin going from 22 to just under 21, which again isn't really the end of the world here. The numbers are still very similar and the sales are just about the same. So there is a little bit of a downside here, but honestly, I think it is more of a temporary thing than a permanent thing. And also, their margins are very clearly higher than they were 2 years ago. So overall, there is short-term improvement in the company as a whole. So I don't think there's anything too negative here other than just very slight decreases, which aren't too much of a concern. Also, their debt to equity ratio is incredibly low at just under 7%. So that is very, very healthy for the company. And now let's get into their recent earnings report. Let's try to see if we could get some information here. So there is an early report on their 2024 fiscal year data. Currently estimated to be a reduction in total annual revenue of 20 to 50 million in 2025, which is not great. Let me see, adding new. So essentially, there is going to be a little bit of a holdup in their exports, from what I'm understanding from this, and it's basically going to impact their revenue, 20 to 50 million. Which, unfortunately for them, if we head back to the income statement here quickly, 20 to 50 million is not an insane amount, but it still is a decent percentage of their yearly revenue. Right around 5%, I think, if I'm doing the math right in my head right now. But so not crazy, but definitely something to be a little bit negative on. Other than that, we can go into the past quarter report and see what we have here. So financial report for the third quarter. And we can go through here a little bit. And I was hoping to see some maybe some outlook, which we can. Fourth quarter expects revenues of 245 million. So 245 million, if we go back to the earnings report, we could see, or I should say the income statement. 245 million is a slight decline from where we saw for the rest of the year, which isn't fantastic. And actually, in the past 2 years, you could kind of see some seasonality here where their December quarter was their highest. Either way, I do think that 2024 will still be a record sales year for the company, but it may be a little bit lower than expected just based on this report. Other than that, there's not too much information here, unfortunately. I would love to see a little bit more. Earnings call, quarterly report. Let's see if there's anything here. That is the entire thing, which I'm not going to read through. So overall, we might have a little bit of some estimates here. So here are some estimates for the company. So revenue 256 versus FactSet estimate of 255. So a little bit of a beat. Identified an error in the calculation of backlog beginning in 2019, for example, was 879 compared to previously of 994. So current backlog is 758. So there was an error in calculating their revenue backlog from what I understand here, and it was actually significantly lower than expected. So that could be part of the reason from this last report that we're seeing their stock price drop so much. However, just based on where their stock price used to be and the results we're seeing now, I think that we can fairly confidently say that we are looking at an undervalued area for the company. EPS did fairly significantly miss guidance. EBITDA was way higher, however, which the estimates were at 57 million and they had 245 million. So overall, that is fairly solid there. Again, the company as a whole, I think there is a little bit of uncertainty here, especially with that fiscal year 2025 revenue being decreased. But overall, I think we are looking at an undervalued range. Again, do your own research on this. I don't really go too much into the company's operations itself. I focus on financials. So make sure to do your own research into the company. But overall, I do think that they can see a rebound, especially based on what this fiscal year 2024 report says about the company. And other than that, that's about it. Definitely an interesting company to pay attention to just based on how much upside there could potentially be here. So yeah, that's all I got for Axcelis Technologies. Make sure to subscribe if you haven't, and I will see everybody in the next video. Thanks for watching.